my outlook has always been that as we moved into this recovery phase, we were going to see bumps along the way as we learn things about how the virus is progressing, as we learn how to do business in ways that or in ways that allow us to continue to do commerce while at the same time minimizing the likelihood of becoming infected with the virus. And as we start to have those learnings, some of the experiments are going to work, some of them are not going to work, and that's going to trigger trends in data that are going to lead to retrenchment in some places and in some sectors. So I expected that bounciness to happen. The models that I'm looking at right now suggest that by the end of the year, we'll be have more jobs and more growth than we have right now, but we won't be at a level that is equal to where we were pre-crisis. I don't think we're going to be at that stage until mid 2021 or maybe later into 2022. And so we're going to be in recovery mode. One other thing I would say is that, and this is an important thing to say, the recovery is not going to happen at the same pace across all communities and across all geographies. The virus did not come into our country sort of all at once, and we're still having our first wave in a lot of places to some extent. And so as we get to the backside, I would expect that we will see some communities that take much, much longer to recover and rebound. And we've done a survey of lower and moderate income communities that we're doing now as a series. One of the things that we've seen very clearly is they don't expect recovery to happen, many of them, in less than a year. So as we think about what support needs to be out there, we need to have in mind and be mindful of that distribution of time periods for recovery that's going to be required, and make sure we don't drop and lose focus and attention too soon.